is once the community has bought in, then the politicians are bought in because the politicians serve the community, right? The community's going to bat for you. They're supporting your project. Everything down to when construction starts, those nosy neighbors will make sure people aren't breaking in your house, right? So you've engaged the community. You talked to them, you went to their meetings, you studied their plan, you've actually put together a thoughtful response and a proposed project to them. And then they're able to then go champion that for you to kind of make it easier.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Armstead Jones is a strategic real estate investing advisor at Real Estate Bees with over 10 years of experience in commercial real estate. Armstead, welcome to the show.
Welcome. Thanks for having me, Sam.
Absolutely. The pleasure is mine. Armstead, there are 3 questions I ask every guest who comes on the show. In 90
Okay.
seconds or less, can you tell me, where did you start, where are you now, and how did you get there?
I started with an idea in my apartment that I could use real estate to build wealth. Then I decided I need to get an education for building wealth. So I took a job paying less working at the state housing department in the state of Maryland. And then I also then went and worked at the economic development arm for the city of Baltimore, learned everything I could real estate. And that took me to where I am now currently doing large scale projects, residential, commercial, transit oriented development, land development. So, it's taken me a very long way.
Wow, that's really, really cool. What are some of the things, some of the skills you learned in the state housing department? And what was the other job you said you worked?
Baltimore Development Corporation, we call it BDC.
Okay. I bet you learned a lot about the way to navigate those organizations from the private now that you're on the private side.
Well, I understand what we call both sides of the table, right? So I understand the government side of it, that helps push through economic development projects, that can add jobs and tax bases, and also that there is a need for affordable development as well. Not all individuals can afford market rate or luxury.
Mhm.
So what it also then showed me is how the money moves. You can't just go to the government with an open hand and say, give me, give me, give me. There needs to be a P3 or public private partnership. There needs to be some leverage on your end on why you need this money from the government. And normally it's what I call it would not happen but for this investment from the government. So, when you start to look at those things, you can identify what is just a straight market rate deal that you don't need any government kind of subsidies in, and then what deals need help. They need gap financing.
Got it. Got it. What were some of the when you walked away from that, some of the things that you see that people typically get wrong when they are approaching the city council, whoever else it may be, when they have a project in hand?
Several things. One, they've never talked to the community, right? You can't do community development if you have not engaged the community. Second, they come in with, I know what's best for the neighborhood, right? It's never about what I know is best for the neighborhood. It's about working with that neighborhood because they might have a nonprofit or a CDC that can leverage grant funds that can help you with your project. And thirdly, some people come in and just throw money, right? Yeah, I'm going to do this. This is going to happen, but I want the government to give me money. Why? Like you're not making a compelling argument on why the government, who are the stewards of taxpayer dollars, giving you money for a project that essentially does not need it. And that's that, but if not for statement, right? If not for the government to step in, you won't get the desired outcome of jobs, right? This office building, convention center you're building, arena, right? If not for the government stepping in and doing it for the long term investment, right? The 20, 30-year projection of jobs and taxes and piggyback taxes. And a lot of people just come in with the thought, well, my project doesn't work, so I need money from the government to make it work. And that's not how it works at all.
Right. I can only imagine. One of the things you mentioned there was talk to the community. What does that mean? What's a practical way to do that?
First thing, you should attend a community meeting. Get to know who's in the community. Who are you serving? Right? Those residents know people. So if there's a master plan, you should go to whatever area you are. You should go to that planning department and find a master plan, vision plan, urban renewal plan, and look at it per the neighborhood you want to work in, right? We would like home ownership on this strip. We would like commercial on this strip. And 9 times out of 10, those master plans are prepared by third party individuals that are architects and traffic people. And they're literally telling you the best places, right? From a 10,000-foot view of what you should try to do in these areas. And then those community people then get engaged and they're like, yeah, we want houses here. We want a grocery store here. Okay, well, if grocery stores are then your thing, you didn't set up a time to talk to the community association about what you propose to do, right? I always use the word proposed because you want them to feel like they are engaged with you and they are helping to make those decisions in those communities as well. But if not, you go in and you don't do that, it will ruffle feathers and it will slow down because the rolling ball effect or the snow, the snowball going down the hill is once the community has bought in, then the politicians are bought in because the politicians serve the community, right? The community's going to bat for you, they're supporting your project, everything down to when construction starts. Those nosy neighbors will make sure people aren't breaking in your house, right? So you've engaged the community, you talked to them, you went to their meetings, you studied their plan, you've actually put together a thoughtful response and a proposed project to them. And then they're able to then go champion that for you, to kind of make it easier.
That's really, really good advice. And there's very few people, actually, I've had on the show that probably have as in depth of an understanding as you do as to how that functions. I mean, because it sounds like it's as much art as it is.
Science.
Yeah, exactly, exactly. Figuring out how to do this, and I think one of the things I hear in all of this is that you just need to budget in a lot of patience and a lot of time.
Correct. Development is different than investment, right? I say that all the time. So my company outside of Real Estate Bees is Imagine Think Tank. We do development, but we also do investment, right? Development is the concept that I see a vision and I'm going to carry that vision on my back until it's complete. But I'm the first person putting in sweat equity and money equity, and I might be the last person to see my money back, right? This return that I got, but it might take 2 to 3 years. But just using numbers, you saw a deal, you put 50 in, and 3 years from now, it's worth, I don't know, half a million or better, right? But you didn't realize that profit until then. Investment is passive. You're trying to either buy cash flowing assets or you're someone who buys and then fix eventually. But that's why you gotta know which one fits better. And development just takes a while. So anybody starting a business and you're doing real estate development, get some rentals. I mean, I'm not the biggest fan of singles all the time, right? Especially if you're trying to do other things. If you're managing those yourself, you know how to do the work yourself, you're personable yourself, great, right? Get you a couple of those, make that your full time. You'll never work a day in your life. But if you're investing, investment is the concept that my money needs to now work for me. So
No, I like that. I like that a lot. There's a lot of things in the economy right now people are worried about. There's talk of, recession, there's talk of this, there's, just a lot of uncertainty. What does this look like are there some leading indicators maybe of just kind of changing grounds? Are there permit pulls? Are there, like, what do you see on the, I guess more on the city planning side of things that could be leading indicators or lagging indicators, I guess, either way you want to look at that, of kind of where we are?
so there's a couple pieces of data that you can look at. I know we've seen massive layoffs, but these aren't from the companies that kind of employ the middle to lower market. These are your financial firms, your tech firms. These people were making six figures. Hopefully, they got a nice nest egg. They probably realistically have 6 to 12 months worth of money sitting around to cover themselves. So we're not looking at a rising unemployment number because those same individuals who had that kind of capital are probably investing it or, you know, trading something or doing something else to make income currently. Um, you'll see, and I'm seeing this in Baltimore, permits are slowing down, right? So the reason is because everybody's finance was locked in before the Treasury started hiking rates. So now they're going back and have to, you know, what they call it, horse trade, right? Like horse trade and get a new term sheet. And now that interest rate on that new term sheet has made, you know, the debt to service ratios, you know, unbearable. So you're going to have deeper pocket people having to go out further, right? Waiting for the market to turn. But we're not going to go into a recession. I think the Treasury and the Fed did correct, right? Like they raised the interest rates to catch up to inflation. We've now caught up to the supply chain issues we were having in 2020, right? So mostly, right, outliers here and there, you know, something a spike, but you know, building materials are pretty much flattening out. The labor costs because permits are slowing down, so labor is getting cheaper. I see subs going to primes and saying, "Hey, you know, you got some work next month. Oh, remember I put in that bid for this? I can take 10%, 15% off of that. If you give me the job now, I'll take it." So you're seeing some of that, but there's no recession, right? A recession indicates a slowdown for um, continual periods, right? Continual quarters. We haven't seen a slowdown. We have seen people with capital are putting their money back in the bank and they're waiting for everybody else's tsunami to rise, right? So they have the money to kind of buy everyone out. I think what will get worst case scenario on the real estate side is that you'll see a lot of these class A and even newly value added class B apartment multifamilies start to get foreclosed on. Delinquency rates are going up. People had a lot of money saved during COVID because they weren't going anywhere, just ordering Amazon, right? Maybe some Grubhub, maybe some Uber Eats type stuff. Now everyone is back to vacation, right? They're buying clothes. Think about the clothing market slow down because why would I buy clothes if I got to sit in the house, right? Like I'm not purchasing things. So now people are spending money on consumer goods. They have less savings. We're seeing delinquency rates go up. And a lot of these multifamily people haven't, landlords or property owners, haven't really given people mercy. They're just like, oh, we can get it right now because there's a housing shortage. So your normal transition is you get an apartment. One day you make a decision to buy a home, whether it's because you got married or you're ready to own one. And people can't buy homes now. So multifamily has just been jacking up their rents, right? Where are you going to go? Where are you going to go? And we're going to hit a point where people can go somewhere. We're going to see the multifamily washout. So my thing is anything over 120 units, you need to start realizing what you can do to set yourself apart in the marketplace you're in.
That's really interesting. Would you say that even in light of the Fed hiking rates and in light of the fact that the residential housing market is still, I mean, apparently fairly hot?
It's still fairly hot because the number one thing, and when I was at the state housing department, we did a research like project on this, right? What makes people buy homes, right? And it's normally life-changing decisions. I moved for my job and I want to buy a home where I'm moving to. I got married, so we're buying a home. I had kids, we need more space, so I'm buying a home. I got divorced, I need less space, right? I need to buy a home. I'm living with my significant other, whether we're married or not, and we separate. I need to find somewhere to live. I end up buying a home, right? It's normally life-changing decisions that make people do that. And people who have it and who are still financially sound are still in the market looking for great opportunities for their American dream to buy a home with a white picket fence. But we have limited inventory. So because of that, the prices still can remain high, but you're seeing days on market increase, right? When we were in 2020, 7 to 14 days, you had multiple offers. You had people paying over list price and then covering the difference in the appraisal and the list price in cash. We won't see those days ever again.
Right. Yeah, that was a wild time. Let's go back to, I guess we talked a little bit about the class A and B. You think that's going to suffer because and I'm just to see if I can articulate what you said. You said class A and B is going to suffer because they've been raising rents so much over time, or so much, recently, that people are going to start looking for other places to go. But how, I guess maybe I missed this in your answer, but if the residential housing market is still hot, it seems that that would then feed that class A and B value add multifamily property. Does that make sense?
So you what you're saying is those individuals should be moving to homes already,
Right.
right?
Right.
There's a lack of inventory. And so as soon as the Fed raised rates, I'll give you a case study. Someone in Maryland, before the Fed raised the rates and they were giving out these 2 and 3%, you could afford a $500,000 home in the county.
Right.
Now that the rates have gone up, your same payment is probably $400 to $600 more, depending on how expensive the home is, right?
Right.
That affordability gap when it comes to a monthly payment kicks a lot of people out of contention for the $500,000 home now. So now you have to find a 400,000 or 350, and it has less bedrooms. You already have 3 kids. You need a 5 bedroom. You're looking at a 4. You're hesitant. You can do it. You could pull the trigger. You could become that property owner. But a lot of people are now very picky, right? They're like, oh, I don't even like white cabinets, and I'll be paying way more than I have to, and it's not even in the neighborhood I want, but this is the only inventory in the market, so I'll just sit on my hands until I find what I want, right? So it's not feeding it quick enough. So what you're getting is people are like, all right, I really can't afford this rent, but I can't afford to go anywhere, right? So if they can't go anywhere, they end up staying, but delinquency rates go up, and once we do figure out that levy that opens the door, all property owners are going to do for the foreseeable future is give away 1 month free, 2 month free, $500 gift card, some Beats headphones. We'll give you free parking for 3 months, right? They start concessioning you, right, to make it seem like it. But essentially, they're hurting, so they're giving away what they can in order to market and advertise to people.
Right, right. Yeah, and we haven't, even in the stuff that we own, we haven't seen that yet. But that's certainly something to keep our eyes on. We start seeing that happen on a more widespread
Well,
basis.
bigger? Are they above 120 units?
Yes. No, that's mistaken. One's I don't own much multifamily. I own two multifamily assets, but one's 106 and one's 246. So yeah, one's above it.
Yeah, the 106 will probably always be okay. The 240, unless it's just in an area where there are no units. Like in Baltimore, at one point, we had 5,000 apartments in the pipeline to be delivered, right? So it's all about market saturation. So
Right.
depending on where you are, if you are the asset in that submarket, you're fine, right?
Right.
But if you're competing, and you need to figure out what your edge is. That's when people start doing the month free, the 2 months free. Come get this gift card. They just try to market themselves differently than all the other product around them because there's too much competition.
Too much competition. Something else to look for. Absolutely. One last thing I want to chat about here is since you seem to have a front row seat to all the different asset classes and how they're performing, and you, of course, again, being part of the state housing department, I'm sure you saw a lot of really unique things. Where are with the office vacancy? I mean, everybody I'm talking to, from New York City to, I mean, all the way across the country, office is generally vacant. What are we going to do about that?
Office is going to be vacant for the foreseeable future. One, as a business owner, now that I know that my employees can be emailed at 6 o'clock after work hours because they're on their computers and they're home. I don't care if you take an hour and a half lunch break. Really don't care, right? Do whatever you please, right? I now don't also need this monument to myself of office space in my kingdom where I've hired, my throne of individuals, right? So now everybody can hop on a Zoom, Microsoft Teams. We can come up with action items. I don't care if you do those action items at 10 o'clock or 11 o'clock at night,
Right.
right? As long as it's in my inbox by 8, right? As long as you're on the call by 10 o'clock the next morning, so we can discuss it, right? We're starting to see that functional and flow works without having a brick and mortar location.
Mm-hmm.
With that said, we've built a lot of monuments, right, to a lot of wonderful people who have created jobs and helped with economic development, right? Help people put food on the table. So we're going to see a lot of conversions of those spaces, right?
Mm.
You're going to see, and there was a concept, and I can't remember the name of it, but you do a mixed use building, but mixed use in a sense like you got affordable housing or workforce housing and with some market rate housing and with some office space and with a community center or a restaurant on the top, some commercial at the bottom, a maker space. You're going to take all these different pieces, and they have a model for this in Philly. They took an old school and they gave every business got a classroom, right? Every business then could sell out of that classroom. But because this building, it was 500,000 square feet or some crazy number, right? They also then used the ground floor as like a marketplace. So Fridays, it was activated. Saturdays, it was activated. Sundays, it was activated. And all of the same tenants who you had up here are coming down here to sell their stuff. And they're bringing people to the building. And you're mixing up the use. It's not just, this is a Bank of America building. They've taken 60% of it. There's a law firm here, an accountant firm here, a title company here. No, it's going to be a mixture of uses in one building.
Right.
Even to the point you could take an office building and you could produce the stuff upstairs to be brought downstairs to ship out loading docks, right? Like we never thought about the concept that you could reuse that building and repurpose it. We just
Mm-hmm.
think you need a whole bunch of land and some tractor trailers and you need manufacturing and you need some rail. Not everything needs that, right?
Right.
Like when we talk about manufacturing of raw material, like we're talking making t-shirts and stickers and products that can be sold in the local economies,
Mm-hmm.
right? Same way we see the coffee boom, right? Every city has a signature coffee shop and several in some places, and they all get picked up by Trader Joe's and all the grocery stores and all the corner stores and mom and pops. Same concept, right? Producing these items locally, using these buildings, repurpose them, and then you got workforce housing. Oh wow, I can work where I live. It goes back to that concept: live, work, and play.
Yeah, no, that's a really cool concept. There's a project here in Memphis that is called the Crosstown Concourse. Same idea. It was an old. Oh, this was a massive undertaking, but it was an old Sears distribution facility. The same idea what you're talking about. I mean, there's everything from a school to doctor's offices to there's workforce housing, there is condos, there's swimming pools, there's workout facilities. I mean, you name it. You really, if you didn't ever want to leave the concourse, you really wouldn't have to. I mean, everything you want is right there. So it's kind of cool. It'll be interesting to see, as people pick up this inventory in the right markets and turn it into higher and better use to things such as what you're describing. Absolutely love it. Armstead, it's been a pleasure having you on the show today. If our listeners want to get in touch with you or learn more about you, and there's one more thing. I forgot to ask about your book. Maybe you can tell us about that as well. What are the best ways to do that? And if you can, tell us a little bit about your book.
Elevator pitch on my book, re-engineering Baltimore real estate. I'm an engineer by trade, so I always re-engineer everything I do, like to kind of back into it. So the book just gives you resources if you were to develop in the Baltimore area, why you should develop in the Baltimore area, what strategies you could put together, and then from there, where to go out, who to pick, those kind of things. So just an introductory guide to kind of helping you get started. That book is available on my website, www.imaginethinktank.com. Also available on my Instagram, which is Imagine Think Tank. Same thing for Facebook, Imagine Think Tank. And you can it's a digital download. You go download it. Feel free if you got questions, you can always contact me. I'm one of those people. You got a question or two, I have no problem answering it. But if you need an essay worth of questions, I will send you my consultation link, so that you can ask me all you want. I do consulting work a lot, so all the way from hedge funds to pension funds. They need someone to kind of explain to them the Baltimore market at a high level. That's exactly what re-engineering Baltimore real estate does. It explains it to you bare bones what Baltimore real estate is, why you should invest, what are you looking for, and here are all the resources that you have available to you in order to get that done.
Fantastic. Armstead, thank you so much for coming on the show today. Of course, we'll include all of that there in the show notes. I do appreciate your time.
No problem. Nice meeting you.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.